Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, on this magnificent Monday for another jam-packed daily cryptocurrency market update. As always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we intend on doing in this video. And actually today we are going to be taking a look at gold and what we can sort of derive from the gold chart, which is setting up in the manner that it is and performing in the manner that it is due to what's kind of going on with the fiat systems. And we can actually use this as, I think, a barometer for how well Bitcoin and the cryptocurrency market, which is in an uptrend against gold, is going to do. So very interesting video lined up for you guys today. The first thing that I really want to do, though, however, is just cover the most relevant cryptocurrency news over the past 24 hours. Obviously, we do these daily market updates. We try and keep you guys up to date on everything that's happened that's relevant over the past 24 hours. Lots of things aren't that relevant in the cryptocurrency space. But just over the weekend, you have an ETH ETF now listed on DTCC. Now, this is essentially the clearinghouse for the stock market. And this is a similar route that the Bitcoin spot ETF went on before it was actually approved. Now, I'm not sure that we're going to get that approval for an Ethereum ETF in May, but one thing I'm confident of is that it is going to be coming, and I think that this is largely signaled for me technically in regards to ETH BTC chart, which has been a massive wedge-like pattern that's likely going to break to the upside out of, and ETH dominance, which is in a kind of bit of an inverse head and shoulders. So we haven't really seen Bitcoin dominance roll as of yet. It's very much following what it usually does. Bitcoin dominance is nothing really out of the ordinary. There's always this kind of will we ever have an alt season narrative that comes around in every single bull market. But I do believe we will. I think a large part of that's going to be in regards to overcoming this regulatory hump. And actually, prior to all this, we did have news that DTCC actually changed its rules on collateral, meaning that all cryptocurrency investments can't be used as collateral through their sort of system. So you can't utilize crypto to sort of back up a loan or anything like that. And is that in preparation for an Ethereum ETF? This only came out on the 26th. And of course, this came out over the weekend. And you can see Franklin Temple's Ethereum ETF was what was listed. Now, this is a very, very good sign. Again, I do believe you're going to get an Ethereum ETF. I think that's going to see altcoins go crazy. Eventually, you're going to end up with altcoin ETFs outside of Ethereum. And then I think actually more broadly, you'll end up with like baskets, derivatives, products around the entire market. You'll end up with a top 10 index, just like what we've seen with Grayscale. I'll show you guys a Grayscale chart actually towards the end of the video because we looked at their large cap fund and that actually perfectly hit its target before pulling back. Lots of resistance coming into play. Also tomorrow, which is absolutely huge news, we've got Hong Kong's Bitcoin and Ethereum. Why do all these Bitcoin maxi people leave Ethereum off when they're talking about the DTCC, not DTTC, Hong Kong Bitcoin spot ETF launch tomorrow. They're also launching Ethereum, an Ethereum ETF as well. And Willy Woo here, who is an on-chain analyst, essentially saying, and here's a little secret from this part of the world. The Asian markets in user count is bigger than the US and Europe markets combined. So this is going to be interesting. I don't believe that mainland China is actually going to be allowed to participate in the Bitcoin spot ETF. I don't think so. We do know actually China and Asia more broadly have been absolutely gobbling up gold at a rapid rate. And we're going to come on to gold just now and relate it to the cryptocurrency market, because what we like to do here on the channel is analyze the markets from a sort of 360 perspective. It helps us give us a clear picture. A lot of people just have their blinkers on when it comes to crypto. They don't look elsewhere, but often the answers to what's happening elsewhere or what's happening with crypto will lie elsewhere. So let's now dive in and talk about that. And let's start things off with a CNBC article. And it says the World Economic Forum, boo, President, we haven't seen this kind of debt since the Napoleonic Wars. Now, all-time highs for debt, all-time highs for markets. They are correlated. This is the great game that has been thrust upon all of us that use fiat systems. They continue to devalue it. It's on purpose, by the way. People have got this idea that they're smarter than the Federal Reserve themselves. You're not, okay? These guys are doing it deliberately, and they're doing it for the impoverishment of the masses. And ultimately, this is all by design, and it's all at this accelerated period and allowed to get to this accelerated period so that essentially they can usher in a new CBDC currency. And I actually think Bitcoin could be a bit of a sheepdog in regards to herding the sheep into this and getting people used to this idea of a digital currency. I want your answers in the comment section, by the way. Why is Bitcoin valuable? Well, my personal opinion is because it's believed to be so. Just think about it. Would Bitcoin be valuable if everyone thought it was going to go down? It's valuable because of the properties that it has and the belief in those properties. And if you look at, what is money? Well, money's taken many forms throughout history. In the UK, actually, at one point it was sticks. We used to use, this is where we get the word tally from, tally sticks, and also where we get the word short end of the stick from. The person that had the short end of the stick, you'd kind of break the stick in two, and you'd give the shorter end to the person that owed the debt, and you'd give the longer end to the person that was the person who had given out the loan. So, interesting world that we're moving towards. We could do an entirely separate video on that, but it's no coincidence that markets are at all-time highs at a time when debt is at an all-time high, and all these fiat systems are debt-based systems. This is a very interesting chart. So $1.7 trillion in interest expenses spending by next April. So this is 2025. You can see the kind of skyrocketing nature of this system. This is madness. Even with 150 basis points, so 1.5% cut, it takes it down to 1.2 trillion. The Fed needs interest rate cuts, or the US economy needs interest rate cuts probably more than anyone. And I still think we're going to get them. We're not in the higher interest rate camp for long. I don't think they're going to entirely crash this system just yet. And if we look at, this is from Lynn Alden, despite all the tough talk about QT and all this nonsense, both the monetary base and the broad money supply are increasing again. Remember, this also aligns with liquidity cycles, which aligns with all the technical analysis that we've been doing. And when we talk about gold, what is gold telling us? Well, we've been following a number of patterns for gold for a while. We'll bring this all into crypto in just a second. You can see you have what is a really large cup and handle that's been forming since sort of 2011. You've broken out of this pattern. There was a small head and shoulders over here that gives us this target. And we have targets around about 3,500 for gold. And actually, we think silver is setting up in a similar fashion. So gold is really escaping. Gold and bonds have historically moved together. Now there's this big divergence, or gold and real rates. And that's because the system is getting out of hand. And this is going to essentially create the biggest, could you call it a bubble? I guess you could, asset bubble ever. Gold has really been going sideways for a hell of a long time. And now it's breaking out due to what's taking place. And crypto finds itself in and amongst all this. If we look at silver, and we'll just use this chart here. This is in an even bigger structure that could see it go all the way to $600. And some people are going to say, well, if gold's only going to 300 or 3,500, that's like a 50% gain. Why is silver going to do so much? Well, it's in simply a broader, a bigger pattern. Remember, this has got a break. And actually, if you look at the gold-silver ratio, which is something that Francis Hood has done a hell of a lot of work on, I can see a lot of merit to it in regards to, actually, silver's going to do quite well. But why am I talking about this? Allincrypto, why are you talking about all this as a crypto analyzer? Well, because gold is essentially signaling to you guys that the game is up. We know fundamentally that the game is up based on what we're seeing with the debt markets. And Bitcoin is in an uptrend against gold. So gold is going to perform very well. Remember, this all aligns with global liquidity, everything that we've looked at. And Bitcoin is in an uptrend against gold with technical targets still to be hit. And not just Bitcoin, we're going to bring the total two in just a second. So this is Bitcoin divided by gold. Bitcoin is in an uptrend against gold. It ran into resistance, it's pulled back. It also ran into sort of technical resistance in regards to its new all-time highs or all-time highs. You will get a continuation of this. So Bitcoin is set to outperform gold, which is going to be going up. That's a very bullish environment. Again, some of the answers you can derive from other markets. And we have higher technical targets. This was our small head and shoulders that got hit perfectly. And it actually then acted as support, key level of significance. Now bigger head and shoulders, and actually an even bigger one setting up. And Bitcoin and gold are both anti-fiat narratives, which is going to see them do very well, I believe. So you have this really bullish backdrop to everything. The emperor well and truly has no close at this point. And actually, if we take things a step further and we say, okay, well, this is Bitcoin, but what ramifications does this have for the broader cryptocurrency market? Well, if we divide the total 2 by gold, what we'll do is... what we've done here. The total 2, so the total cryptocurrency market, excluding Bitcoin, is in an uptrend against gold. And it's following what we like to teach, which is stage analysis, absolutely bloody beautifully. Meaning it's in an uptrend. So right now, there's turbulence in regards to the markets due to inflation isn't really upticking, okay? And I'm going to say that, and people are going to say, what are you talking about? Well, if you use CPI and you use the PCEs, it's just going sideways. There's uncertainty in markets. Markets don't like uncertainty. Rates are being priced out, or rate cuts are being priced out. We've got the Fed meeting up on Wednesday. We've got Hong Kong ETFs tomorrow. Today, we've got further proliferation of the system being announced, essentially, in regards to the Treasury Buyback program, or the future program that they're going to put in place. And this is going to be liquidity. The QT that Jerome Powell has been doing has been largely null and void by Yellen, and he's now at a point where he's thinking about tapering that QT off. It's a very bullish environment, guys. Gold knows this. This is why we started with gold, and we've related that to the cryptocurrency space. I don't think you get this kind of analysis anywhere else. So if you're not already a subscriber, do consider becoming one. Tomorrow, you have, of course, Yellen setting forward her plan. There's really 3 options that Arthur Hayes is laying out here. I like these. I looked at them yesterday. Stop issuing treasuries by running down the TGA, which is their account basically to zero. That's $1 trillion of liquidity injected. Shift more borrowing to T-bills, so away from the sort of long-dated bonds into T-bills, short-dated bonds, from the reverse repo. That's $400 billion. And what happens when they get to zero? Who then steps in? You know, they're going to drain all this liquidity, or a combination of both, which is about $1.4 trillion. Either way, all roads lead to the same destination in regards to the money system continuing to proliferate. Even Brian Armstrong yesterday actually talking about how we're entering a Japanese-style economy, which is something that we've spoken about previously as people that have been trading the Nikkei, which is essentially just a short yen trade at this point. And the stock market always has been and still is essentially a short the fiat systems trade. And this is why everybody should give a shit about markets and finance, because it is integral to all your lives. It affects everything: your mortgage payments, your energy bills, your food prices, and your direct standard of living, basically. And you are being played a game on, quite literally, of they are devaluing your wage and you're not getting compensated. It's literally theft is what it is. Not to mention taxes on top of all of that. And everything is taxed before you even pay tax. You know? Very interesting world we live in. And we're at this really interesting kind of junction, I think, in regards to where it's now going. And we're very bullish. And we've kind of, what I wanted to do in this video is lay out a little bit of fundamental reasoning into what I think is coming for the markets. And I think there's going to be this massive asset bubble that's on the back end of this kind of spiraling debt-based system. We've seen very much, even though they've tried to talk a tough talk, it doesn't really work at this stage of the system. You would, and maybe this is their plan, I don't think they're going to do it just yet, they need those CBDCs in place, completely implode the system if you just turn the tap off. It just can't happen, and we are now at a stage where everybody is unbelievably dependent on the state and their spending. And dependent, I mean dependent. Without them, you know, and this is all by design. Anyway, we're getting way too off topic. We're talking about some really interesting subjects here. If you're not already a subscriber, do consider becoming one. Interesting news in regards to TCC. This was the route that Bitcoin ETF went on before it got approved. Also, very interesting to see what kind of inflows we see tomorrow in regards to Hong Kong. I think I'll actually be open somewhat when I'm asleep, so I might stay up to sort of see what they're doing. There'll be tickers that I can watch on TradingView. Getting interesting news in regards to lots of stocks today. We're not going to bombard you with too much more. But on that note, I'm going to love and leave you. Get ready for one of the biggest bull markets in history based on the proliferation of the debt systems. That's all from me, ladies and gents. Have a wonderful Monday, and I'll see you all in the next one.